Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin. More specifically, we're going to do another video on Bitcoin dominance. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Links in the description below. We still have that code that you can use Cyber Monday, and you can get 50% off your first month if you want to. Just enter the code at checkout. Let's go ahead and jump in. Now, before we get too far into the dominance videos, I want to remind people why we talk about them and also talk about how over the next few months, the dominance rally could start to slow down. Now, I'm of the opinion, and again, I could be wrong, right? I'm of the opinion that dominance has not yet topped, okay? I think it will go higher. I've said that all year long. There's been a lot of people that have called the top on Bitcoin dominance all year, but it hasn't yet necessarily topped. It's always possible that this most recent high is the top, but I still think there's one more move by Bitcoin dominance, probably before the end of the year, and if not, then by January. The reason we talk about dominance is not, because one of the questions I get is, well, how do you make money on dominance? It's not like you're going to go out there and buy Bitcoin dominance, right? But how do why do we talk about it? The reason why, I talk about Bitcoin dominance as much as I do, even though I know it's not a popular view to have, it's not a popular video to have. Anytime I put out these videos, I get a lot of flack on Twitter. But the reason why I talk about it is because in such an uncertain world, where it seems like the macro risks are piling up, seems like the unemployment rate is slowly trending higher, in a world such as this one. And as investors, right, you want to get exposure to assets that you like, right? It's hard for people to just sit on their hands forever. And so what I've said for the entire year is that a Bitcoin heavy crypto portfolio will likely outperform an altcoin heavy crypto portfolio. Now, in order to understand that, we first must say, hey, there's always some altcoins that outperform Bitcoin, always. And I said that coming into this year. I said, guys, look, my view is that Bitcoin dominance is going to go up all year long. There's going to be some altcoins that outperform Bitcoin, right? There always are. That doesn't detract from the Bitcoin dominance theory. If you have made money on some of the altcoins that have outperformed Bitcoin, congratulations, right? Congrats on the gains. I'm not trying to minimize that. My goal was to say collectively, altcoins would underperform Bitcoin in the pre-halving year, not all altcoins would. One form of common criticism that I see is that I'm cherry picking the altcoins that have underperformed Bitcoin. But considering that dominance has gone from 39% all the way up to about 53%, I think it would be more fair to say that we would have to cherry pick altcoins that did outperform Bitcoin, right? There's more altcoins that have underperformed than have outperformed. Okay, because so many of them have just slowly dwindled. Now, a lot of them are up recently in the last few weeks, but they are still down collectively against Bitcoin throughout the pre-halving year. And so the argument has been that if you want exposure to crypto, which, again, if you're watching this channel, I imagine most of you are crypto enthusiasts, right? If you want exposure to crypto, then Bitcoin is where you want to be in the pre-halving year. The reason for that is it gives you exposure to the upside while minimizing your downside risk in the altcoin market, right? That's the whole point, is that no matter the direction of Bitcoin USD, the dominance should go up either way, right? Whether Bitcoin goes up or down, or even if it just goes sideways for a while, right? The idea over the long haul in pre-halving years is that Bitcoin dominance should go up either way. And so by having a Bitcoin heavy portfolio, you are essentially trying to maximize your risk-adjusted returns. Again, it doesn't mean that some altcoins are not going to outperform Bitcoin. Many are, many have, many could continue to do so. It just means that Bitcoin has led the market, right? Bitcoin has, for the risk that you're taking, it has been much more worthwhile than most, but not all, altcoins. And we sit here today with dominance at 53%. We started the year at around 41% or so, maybe 41 to 42%. We've come a long way. There are not many metrics in the Cryptoverse where that metric has not had a weekly close below the 20-week SMA, the bull market support band, for the entire year, or the 21-week EMA. For the entire year. We've had a single wick all year that went below the bull market support band. A single wick, and it occurred in January, and early January at that, the week of January 9th. Ever since then, we have not had a single move below the bull market support band, and not a single weekly close at all year below the bull market support band. So for most altcoins, for those who converted their altcoins to Bitcoin in early 2022, when I said that altcoins were too much risk relative to Bitcoin, most of those altcoins have gone down against Bitcoin. Even if you waited until 2023 to make the trade, most of those altcoins are down against Bitcoin, right? So had you done it in early 2022 or early 2023, most, but not all, altcoins have bled against Bitcoin. And it's one of the reasons why the dominance has gone higher all year long. Now, I know what you're probably thinking. You're probably thinking, well, Ben, at the beginning of 2022, dominance was at 39%. But we went below that dominance level in Q3 of 2022. So how can you say that it was right to convert alts to Bitcoin back then? Well, again, guys, this includes stablecoins. And we can go look really quickly here. Let me just go pull it up. We can get an approximation here for the stablecoin market. You can see that the top for Bitcoin occurred in November, but from that level, the stablecoin market cap increased from 128 billion to 161 billion throughout, for the first half of 2022, late 2021 and the first half of 2022. So one of the main reasons that dominance did not do as well, especially when you're looking at it on TradingView in 2022, is because the stablecoin market cap was going up, and the stablecoin market cap is a component of the overall market cap. But if you go over and we exclude stablecoins from the calculation and just look at this since May of 2021, Bitcoin dominance, excluding stablecoins, has never stopped putting in higher lows. And this was something that, I can't tell you how many times people, they looked at these views on Bitcoin dominance and said, no way, right? Altcoins are going to take over. Dominance is going to 20 or 30%, right? This was a common view that many people had a year ago. If you remember back to sort of late 2022, there were a lot of people calling for 30% dominance. That Bitcoin, was no longer king, and it would slowly fade as other things like Ethereum, Flipit, and all that sort of stuff. But we faded that narrative, right? We said, no, Ether Bitcoin is likely putting in a double top, just like Bitcoin USD did in 2021. And the dominance should go up. And again, excluding stablecoins, dominance has never stopped putting in higher lows since May of 2021. Now, guys, I'm not under the assumption that dominance is going to go up forever. I know that it won't. Right? I know that it won't. My view has never been that dominance is going to go back up to, astronomically high levels, right? I set a target of 60%, right? And I don't know if we're going to make it there. I honestly don't know. I can find compelling reasons to think that we will. You could look at these fib retracements and look at where dominance topped last cycle in the pre-halving year. You can see that it topped right here. Let me extend this over at the 618. The 618 this cycle for Bitcoin dominance would put you at around 60%. So again, my view is that dominance is trending in that direction. trending towards 60%, plus or minus a couple of percent, right? I don't know exactly where it's going to go, but my view remains that it will likely continue to trend higher despite everyone calling for the top on this thing for the entire year, okay? So Bitcoin gives crypto enthusiasts, right? It gives these people exposure to the upside if you believe in the future of crypto, right? It gives you that exposure. You say, hey, I like this altcoin, but unfortunately, I think that altcoin is going to bleed to Bitcoin, right? It's nothing against the altcoin. It's just to say, guys, look, I mean, it's tighter monetary policy, and when that happens, high risk tends to bleed to low risk, right? So high risk alts tend to bleed to low risk things. There's always a few that outperform. Always a few. Cherry picking a few examples does not negate the dominance rally that we've seen. It does not. And I mean, we can go down that rabbit hole. We can argue that all we want, but the dominance has gone from 41% to 53%, and the year's not even over. Okay? So I can't help but think that this view continues to be correct, and my thinking is will continue to be correct until we go to looser monetary policy. Because last cycle, we know that dominance did not top until just before we went to looser monetary policy. And you can see that pretty clearly if you overlay interest rates onto this chart. It was after the Fed started to cut rates that Bitcoin dominance topped out. Bitcoin USD went higher and topped out just before rate cuts, right? So dominance topped out the last month before the Fed cut. So the Fed cut in July, Bitcoin USD topped in June, Bitcoin dominance topped in September. So what was it? Bitcoin USD tops, then the Fed cuts, then Bitcoin dominance tops. So again, number one, this is just what happened last cycle. I can't promise this if it's going to happen this cycle or not, but this is just what we saw last cycle. It's first Bitcoin tops, then the Fed cuts, then Bitcoin dominance tops. That is what happened last cycle. Bitcoin USD hits its high, the Fed starts to cut, dominance tops. Does the Fed care about Bitcoin? No, right? Fed doesn't care about Bitcoin. But the Fed cares about the economy. And fundamentally, I think most of us here, whether you're bullish or bearish, most of us are long-term bullish on the Cryptoverse, right? And so there's this steady flow of people DCAing, and they just continue to do that as no matter what, right? And so over the long haul, assets like Bitcoin should trend higher, right? They should trend higher, especially as the Fed just keeps printing more money. Okay, we should see that happen. But the counterpoint is that while that is true, it doesn't mean that macro uncertainty can't weigh in at certain points in the cycle, just like it did over here before the Fed started to cut. So think about it like stocks, right? The Magnificent Seven. You have all these major companies that have been outperforming the rest of the index, right? I mean, Apple, Microsoft, Google, Nvidia, Tesla, which Tesla has been a little bit weaker recently relative to the others. But all of them have been doing very, very well this year. The funds are flowing from like the higher risk stocks to the lower risk stocks. And why is that? Why would that be? Well, it's because during a higher interest rate environment, during a period of QT and where the money supply is going down, there's a risk that companies will go bankrupt. Think about in crypto. Think about how many companies have gone bankrupt. Think about even in equities, or not even equities, just think about companies, like small businesses. Think about how many have gone bankrupt over the last couple of years. And so what investors do is they flee these higher risk things for the lower risk things because they don't know if those companies will survive. You know, they say, guys, like, even if we get a recession, it's not like Apple's going anywhere, right? Like, Apple is still going to be selling you iPhones and iPads and, you know, all this stuff, right? They're still going to be selling this to you next year and the year after and the year after, regardless of whether we get a recession or not, right? Microsoft isn't going anywhere. Google, they're not going anywhere anytime soon. So what happens is that people, they take their money from these things that they don't know if they're going to survive, right? Like these lower market cap companies, like, I don't know if that thing's going to survive, but these other companies like Apple and Microsoft and Google, et cetera, NVIDIA, they can probably survive. Because, why? Because they have the balance sheet to do so. They can survive tough times, you know? Even if we were to go into a deep recession, they could survive that more than likely. But the higher risk stuff can't necessarily survive it. And that's the issue, right? You just don't know which ones are going to survive. And so the behavior by investors is to flee the stuff that they're not that confident in over the long haul and to go towards the stuff that they're more confident in. With stocks, it's your Magnificent Seven. With crypto, it's Bitcoin. Does that mean that no stocks outside of the Magnificent Seven have done well? No, plenty of them have. Plenty of them have. Does that mean that no altcoins have done well? Of course, some of them have. But most of them have bled back to Bitcoin. So the way the cycle went last time was, you know, you get the rate hiking cycle, Bitcoin USD tops, then Fed cuts, then Bitcoin dominance tops. So the dominance should still go up even when Bitcoin does eventually turn the corner, wherever that is, right? Whether it's now, whether Bitcoin breaks out to 40K, 42K, 46K, 48K, wherever it goes, Bitcoin dominance should continue to go higher. Not a popular view, and I've had, you know, I had a lot of time to think about these dominance videos and sort of think if they've been helpful to people. And I'd like to think that they have, but I also know that some people, you know, they always feel shafted if they stayed Bitcoin heavy and they missed out on some altcoin that went up, you know, 10x or something this year or even more, right? It's easy to feel like, oh man, if I had just bought that altcoin, I would have been better off than buying Bitcoin. The counterpoint, of course, is that it's survivorship bias. There's no way to know which ones would have done that. Now, some people who have those altcoins are like, well, of course we knew. But again, you know, for every one that outperformed Bitcoin, there was like probably 100 that didn't, right? And so what I do is I don't beat myself up for not knowing which altcoins are going to outperform Bitcoin in the pre-halving year. I just say, hey, most of them are going to underperform. And I will stick with Bitcoin heavy portfolio, right? I will stick with a Bitcoin heavy portfolio until we go back to looser monetary policy, is my view. Now, when is that, right? Like, 'cause I certainly don't have the view that dominance is going to go up forever. The market is saying that cuts are coming in May. I honestly don't know if it's going to take that long. It could, but I mean, cuts could also come earlier. I mean, they could come in March for all we know, maybe even January, but the market is always changing its mind. It's also possible we don't get cuts next year, but the market is of course constantly changing its mind as to when the cuts are actually going to come. But remember, it's normally Bitcoin USD tops, Fed cuts, Bitcoin dominance tops. And it was the same thing with the Russell 2000 last cycle, right? Where did the Russell bottom against the S&P? After the last rate cut, right here. And if you overlay interest rates onto this chart, you will again see that is where, you know, it was once we went back to looser monetary policy, that's when a lot of these higher risk companies started to do well. This is one of the reasons why most hedge funds just can't keep up with the S&P, because a lot of times, people say, well, like the S&P is only going higher because of 7 stocks. Well, yeah, but that's often the case, that there's a few stocks that are responsible for a majority of the gains. It's why hedge funds have such a hard time beating the S&P 500, because most things are just bleeding back to the S&P, because there's a few stocks on the S&P, this time the Magnificent Seven, that are basically carrying the whole index. So the only way that hedge fund manager, or not the only way, but one of the main ways that hedge fund managers would have beaten the index this year was to just go heavy into the Magnificent Seven, despite the fact that they've been outperforming small caps for a long time. And since a lot of hedge funds didn't do that, they've underperformed the index. But that's not like that happens a lot. There's always a few stocks that tend to be responsible for a majority of the gains, and that's why it's often better for most investors just to buy the index rather than get too rather than get so focused on individual stock picking in some of the micro caps. That doesn't mean you can't make money there, but you have to spend a lot more time figuring out like which ones are undervalued. It's a lot easier just to buy the index, right? And say, hey, I don't know which ones are going to outperform, but the S&P is generally going to trend higher because there are going to be a few that outperform. So, going back to the dominance chart, it's currently sitting at 53%. Why should we consider it to go higher? Like, why should we consider that it could go higher from here? Because a lot of people say it's topped. And a lot of the people that, there's first of all, there's some people that just say it tops every single time, right? There's that view. But there's some people that have been bullish on dominance that are now saying it's topped here. And so people are starting to slowly say, you know what? It's been a great rally, but at some point, this thing's got to turn around. I'm not at that point yet. I see tighter monetary policy. I think dominance is going higher. I think if Bitcoin were to keep rallying, how does the dominance not go up, right? If Bitcoin keeps going up here, every single time that Bitcoin has broken out, every single time this year, if you look at dominance overlaid on this chart, every single time, dominance goes up when Bitcoin USD breaks out. So if you think that Bitcoin USD is going to break to the upside, then how does dominance not go up, right? Bitcoin can slowly trend up. It's been slowly trending up for the last few weeks. Dominance has been slowly trending up. If Bitcoin were to break out, where does dominance go, right? Is it going to go down? Is it going to go down if Bitcoin breaks out? Probably not. If Bitcoin breaks out to the upside, then dominance will likely soar with it. But the counterpoint is, well, what if Bitcoin breaks down, right? What if Bitcoin breaks down? Well, then dominance would still go up, more than likely. Because remember, the thing that we mentioned was that Bitcoin tops first, then the Fed cuts, then dominance tops. So what we've historically seen is dominance doesn't top until after Bitcoin does. So if Bitcoin is topped, then there's still no guarantee that dominance has. And if Bitcoin hasn't topped, then dominance is still a ways off from topping. At least a couple of months, or a month or two. Last cycle, it was another month or two. And if you go look, at Bitcoin USD on the daily time frame, let's go look at this. It's been building up to something, Whether it breaks out or not is of course your guess. It looks like if it breaks to the upside here, look at this. Dominance is already starting to climb. And if this thing breaks up, I don't see a scenario where dominance isn't also breaking up to the upside. It's hard for me to envision that scenario. Remember, one of the things that Bitcoin rallies do in pre-halving years is they break all Bitcoin pairs down. Ether Bitcoin is at 0.054. What would it take? What would it take for Ether Bitcoin to go below this wick here? 0.049. What would it take, right? Would it take a Bitcoin rally? Would it take a Bitcoin dump? A lot of these drops by Ether Bitcoin occurred on Bitcoin rallies, not Bitcoin dumps. There's I think one of them was on a Bitcoin dump, but a lot of these were on Bitcoin rallies. So if Bitcoin were to break out, then I think Ether Bitcoin can take out this low. Can that happen, right? Yes, it can. Will it happen? Place your bets, right? Place your bets. How high could Bitcoin go if it breaks to the upside? Well, you know, coming into this year, my view is that Bitcoin would not go higher than 35K. So I could sit here and try to pretend like, oh, you know, it's going to top out at this price or this or that price, whatever. But I mean, it's already exceeded my expectations. And in my own history with Bitcoin, like I've essentially learned that once it exceeds your expectations, it is foolish to try to shift the goalpost and say, actually, it's going to top out here. Because oftentimes what happens is it goes higher than we think and it goes lower than we think. In 2019, I mean, it went a lot higher than anyone thought. And then in March 2020, it went a lot lower than anyone thought. So I look at these charts and I can come up with price targets, certainly. I mean, I could look at where it went last cycle, right? I could say, all right, well, you know, last cycle it went up to the 618, right? 618 before it topped out. This cycle, the 618 from 69K puts you at around 48, 49K. If you take April as the top, right here, the 618s that are on 46K. Okay, 46K. Now 46K is interesting because that actually corresponds to 2.5 log lines down from this high. Half, 1, 2, right here is 46K. 46K. And what's fascinating about that is, if you're not familiar, like we've historically seen, you know, these drops of 2.5 log lines each time. So, you know, if it breaks up, if Bitcoin breaks up and goes into the 40s, the mid 40s, the high 40s, then I think that the high 40s would be a significant level of resistance. But that doesn't mean it can't eventually break above that. But I would say that, how does Bitcoin go to the high 40s without dominance also putting in a new high? How does that happen? Because for me, I can't really see that scenario. I'm not saying it doesn't exist, because I've previously been unable to see certain scenarios that did play out. But I would say if Bitcoin breaks into the high 40s, how does dominance not put in a new high? And if dominance is putting in a new high, how are all Bitcoin pairs not putting in new lows? If you look at total 3 minus USDT divided by Bitcoin, we've tracked this for a while. It's back down to 43%. So you can see that, I mean, it essentially just got rejected over here by the bull market square pin all the way down, rallied up, and it's just been rejected again. It did something similar over here, right? Like back in 2019, it came up, it got a little bit above it, but it still kept getting rejected, and eventually it broke down. Now, remember, when it broke down, when alts broke down against Bitcoin, it was on a Bitcoin rally. Like, so when dominance, when Bitcoin USD went to its yearly high, in June, that corresponded to all Bitcoin pairs breaking below 43%. Okay? So here it is at 43%. Now, when did Bitcoin top on this chart? Where was total 3 minus USDT divided by Bitcoin at that time? It was around 38%. Around 38%. So I think what you have to look for is, if Bitcoin were to rally, above 40K and break all Bitcoin pairs down here, right? If they come down here, then you really have to wonder, right? You really have to wonder how much more can they take? And if Bitcoin were to then roll over from the mid 40s or the high 40s, and alts are down here, are they more likely to continue dropping, or are they more likely to go back up? Last cycle, once Bitcoin found its yearly high, alts dropped against Bitcoin, and then the Bitcoin dominance went up, right? So Bitcoin topped, then the Fed cut, then dominance topped. We could see something play out again like that, right? Bitcoin tops, Fed cuts, dominance tops. If you look at the year-to-date ROI of Bitcoin dominance without stablecoins, you will in fact see that it's outperforming 2015 and underperforming 2019. Interesting, right? It's interesting because it's outperforming 2015, but it's underperforming 2019. And so then I look at this chart and I say, well, why can't it go higher? I mean, in both of these cases over here, we saw dominance sort of slowly trend back up into the end of the year. December tends to be a time when Bitcoin is a little bit, shows relative outperformance with respect to the altcoin market on average. So why shouldn't I assume that dominance can't go up? And if you look, if you go look at year-to-date ROI of Bitcoin in 2023, it's actually above where it was in 2019 at this time and below 2015. So, while there's part of me that likes taking the average of 2015 and 2019 and saying, well, it could at least trend there, which I think it very well likely could. What if it goes higher, right? What if it goes all the way up to where the 2019 trend line is? This is, again, is excluding stable coins. So, how do you get a scenario where Ether Bitcoin breaks down, right? How do you get that scenario when it just seems like Ether USD keeps going up? I think the way that it could happen is if Bitcoin dominance, if Bitcoin USD were to break up quickly, or if it broke down quickly, but I mean with momentum going up, we'll talk about the up track first. If Bitcoin USD were to break up, then that's where alt Bitcoin pairs break down. How high would it have to go? Well, I mean, I guess we can go try to take a look at that. Let me pull something up here. So I'm going to pull out. Okay, so this is Wolfram Alpha. So basically, the argument is we don't need anything, right? But if you believe that Ether Bitcoin is going to break down, it needs to go below 0.049, doesn't it? Right? If you look at Ether Bitcoin, the low from June 2022 was 04908. 04908. So let's put in 04907. That would be a new low for Ether Bitcoin. So what would have to happen for it to get there? What would have to happen? Well, it depends on the price of Bitcoin and the price of Ethereum. So what if Ethereum were to go? I mean, the thing is like if Bitcoin goes up, it's going to take Ethereum with it. The hard part is just knowing how far will Ethereum run if Bitcoin also runs. But let's suppose that Bitcoin went to, we'll try a few different numbers here. Let's first suppose Bitcoin went to, say, 46K, which was the logarithmic regression thing, right? So 46K. X divided by 46K. So X is the valuation of ETH. So where would that put Ethereum? It would put it at 22.57. 22.57. Can ETH make it to 22.57? The funny thing is 22.57 by Ethereum would be a new yearly high, right? Like it would be a new yearly high again. Because these prior highs We're at, you know, this one was at 2035. This one was at like 2128. 2000 or 2257 would in fact be a new yearly high. Now, I know a lot of people are drawing this trend line on ETH like this, just flat across the page, or drawing it to this wick over here, right? It seems reasonable, right? I mean, because if you look at last cycle, the yearly high for Ethereum occurred at that point, right? Like when it hit that level. That was when that yearly high was in. And we're almost there. We have not even hit that level just yet, right? In fact, that level is 2160, and we've come pretty close. We haven't hit it. But there's also an idea that this is a wedge, is another view. And if you look at it like this, we're going to switch this over to a regular scale. It doesn't really matter if you look at it on a regular scale or a log scale. I mean, I can show you both ways. But if you look at this on a regular scale, where does this trend line come in again, right? So you have, So you have this one here at 2029 or so. And you have that one at 2141. If it went to the trend line today, where would it be? 2246? Let's go all the way up to 2257. Right around there, right? Right around there. So the point is that if you had a scenario where Ether USD went back up to the top of the, to where this wedge is, if it came back up to this level, how does it get there? Well, it only gets there, in my opinion, if Bitcoin's going higher. But what's funny is that if it were to go here, and at the same time, Bitcoin is going into the 40s or something, high 40s, Ether Bitcoin could still be putting in a new low. So it all depends on how strong Ethereum is. If Ethereum were to take out this level and start to come up here, then this wedge becomes invalidated, and it's not best viewed as a wedge. If you're not familiar with what I'm talking about like sort of like viewing it like this, where you basically have this pattern of down, and you keep going back up to the top of the trend line, but the issue is that it's occurring on I think generally speaking decreasing volume, right? Like there's less volume today. I'm not really sure. I mean, this is this exchange, but yeah, I mean, like generally speaking, each of these, and we've had some volume recently, don't get me wrong, but like it's still, we're spending a lot of the time down here. This last peak, we did go a little bit higher in volume, and of course way over here, volume was a lot higher than it is today. So right, like we've been hitting these higher highs, but on decreasing volume. So, I think you have to look at this and say, well, if Bitcoin were to break up and it broke up enough to make Ether go to a new low, a new cycle low below 0.049, then that's where things get really interesting if it also happens to correspond to rate cuts, right? Because normally risk assets sell off when you get rate cuts. Now, I know what some of you guys are thinking. You're probably like, well, why would the Fed cut, right? I have no business cutting. If you look at inflation year over year, it's still relatively high. I mean, it's still 3.23%. Core inflation is at 4%, but it's moving down. So why would the Fed cut? We have no business cutting. They told us higher for longer. I think they were talking about Bitcoin dominance, but they told us higher for longer. But the problem is that the labor market is starting to show a little bit of weakness, right? It is trending out, right? Like look at a 3-month moving average of the unemployment rate. Like it's slowly starting to pick up the pace here. If you were to look at unemployment level by reason for unemployment, job losers is starting to break to the upside, right? Like look at a 3-month moving average of that, right? It's starting to break up. Look at one of the reasons why the unemployment level is going higher is because of new entrants to the labor force. Look at it. It's going up pretty quickly. Look at the year-over-year percentage change of this. Look at the year-over-year percentage change of permanent job losers. You see where it is today? It's at 26.68%. Right? I mean, the only 2 times in history where we're tracking this where we had that were these 2 recessions over here. So again, I'm not saying the S&P has to drop 50% like it did in the dot-com crash or the financial crisis. What I am saying is that, there is reason for the Fed to pivot in 2024. There's reason for it too, because it's an election year and there's going to be political pressure, I think, for them to pivot. And if they pivot and we get rate cuts, well, remember, that's usually when dominance tops out, just after that. Dominance tops out after rate cuts. So we're getting close, potentially, to that milestone. But I can't, I can't get on board with the dominance rally being over yet. I just can't. As much as I would like to, as much as I would just love to just jump on the altcoin bandwagon with everyone and say, to hell with the macro, let's just go full degen. How do I look at this and not say that Bitcoin is still the better place to be if Bitcoin dominance is going to go higher? I have a Bitcoin position. I've had one for a long time. In late 2022, I said back then, Bitcoin heavy crypto portfolio, it gives you exposure to the upside while minimizing your downside risk. In early 2022, I made a video saying altcoins are too risky against Bitcoin. And by converting your alts to Bitcoin, it likely will work out better. There's other altcoins we can look at. BNB Bitcoin has been a major tailwind for Bitcoin dominance because BNB has a pretty large market cap. This thing is still moving down. It's still moving down. 0.00606. It hasn't been this low since March of 2021 or April of 2021. Has not been this low since April of 2021. BNB broke the lows, right? Why can't Ether? Maybe it can. I don't know. You have other altcoins. You have like ADA Bitcoin, which is at 1,000 sats. And I think, I think everyone's already basically said, well, there's no way it's going to go lower than that or below 800. And it might not, right? Like it might not, but remember last cycle? Where it was? Just before we got to the first rate cuts, it was right here. And it broke down on a Bitcoin rally. But the rally only lasted a few weeks, right? It only lasted a few weeks. If you overlay Bitcoin USD onto this chart, where was ADA Bitcoin when Bitcoin topped out? It was right here. This line right here. So around 700 sats. So that could be a warning sign. If ADA Bitcoin were at 700 sats, it could be kind of a warning sign. Now, why is that? I mean, and especially like the idea that Bitcoin cares at all about what Cardano is doing or Ethereum to a maxi is absolutely absurd, right? It has no business caring about that. But I think the reason is because if the purchasing power of these altcoins with respect to Bitcoin keeps going down, then as people keep converting those alts to Bitcoin, it just has less and less of an effect, right? Just less and less of an effect as time goes on. And so that's what you look for. Again, I'm not saying it has to happen, but if ADA Bitcoin were to break down below 800 sats, it's kind of eerily familiar, is it not? This low here and then this low right here. You get a bounce for a little bit, only for it to roll over on a Bitcoin rally. What if that happens? Like, what if we go into December, Bitcoin breaks up into the 40s, ADA Bitcoin breaks down, everyone then loses their minds because Bitcoin, is going parabolic, and then it tops out just before rate cuts, just like 2019. That could happen too. If you look at total 2 minus USDT divided by Bitcoin, it's also going down, right? I mean, it keeps putting in lower lows. This includes ETH. Don't tell me ETH is strong. If ETH is strong, why is total 3 minus USDT? I mean, total 3 minus USDT divided by Bitcoin at least held this prior low from June so far. I don't think it will hold forever, but it held so far. Total 2 minus USDT divided by Bitcoin put in a lower low. And the only difference between total 2 and total 3 is that total 2 includes ETH. So when you include ETH, it's even weaker in terms of the trend. If total 2 minus USDT divided by Bitcoin were where total 3 is, then it would already be down here, but it's not. So because it's still up here shows you that Ethereum has been stronger than the altcoin market, but we don't care about what it has been. We care about where it's going, right? And total 2 minus USDT divided by Bitcoin topped out in late 2021. And every single move higher has been a lower high, whether you like it or not. Again, it's not about what, we necessarily want to happen. But when you look at ETH or Bitcoin, people can say all they want to, but again, even the merge rally was a lower high. You remember the end of 2022? Everyone was losing their minds about Ethereum, the flippening and all this stuff. It was still a lower high that then slowly faded every single time, putting in a new low, a low, a low, a lower low, a lower low, a lower low. That's all it's been all year. That's literally all it's been all year. So many people have been bullish on Ether Bitcoin this year. But if you look at the Heikinashi monthly candles, it's basically been down only for Ethereum's Bitcoin valuation for the entire year. That doesn't mean it's not going to bounce. In fact, maybe it puts in a lower low and then people sell and then it gets a bounce into the new year. That could happen. But this trend has not yet changed. And right now we're looking at large candle bodies with no overshadows and long wicks to the downside, showing a fairly strong trend right now that has not yet shown any signs of reversing, right? And even if it does reverse, it still doesn't mean you can't get something like that, where it just reverses for a few months, January, February, and March, and then keeps going down into the months after that. It looks like, Bitcoin dominance monthly Heikinashi candles have been green since December. Not a single red one. Not a single one. Even though Bitcoin USD had 2 red monthly Heikinashi candles, Bitcoin dominance didn't have a single one. Bitcoin dominance has been stronger, relatively speaking, because dominance was going up even when Bitcoin was going down. So it's a brutal market, I will say that. The reason why we talk about dominance, I'm not saying you go, I'm not saying like, oh, you go buy Bitcoin dominance or you don't, right? I'm saying it tells you how to manage your risk in these years, right? It tells you that. And if you want to take on more risk, good. The altcoin market's there. What's right for me is probably not what's right for you. The altcoin market is there for your taking, okay? And I hope you guys make a lot of money in the altcoin market. But, if you're in wealth preservation mode and you want to make sure you protect your capital, then Bitcoin has offered better risk-adjusted returns than essentially the rest of the market. We know that by looking at just the Bitcoin dominance chart. You also know that by just simply going over and calculating out your risk-adjusted returns for a portfolio of, say, Bitcoin, ETH, and Litecoin, just for the hell of it. It makes it a prettier chart when you include a third coin. And it shows you that heavier Bitcoin portfolios maximize your Sortino ratio and your Sharpe ratio over Ethereum. It shows that. But it doesn't stop people from saying, well, Ethereum's been holding up well. Yeah, Ethereum does very well in in halving years and post-halving years with respect to Bitcoin. But in bear market years and pre-halving years, Ethereum does not do that well against Bitcoin. That's why it's so much lower. It's because in these years, it gets wrecked against Bitcoin. Why should this time be any different? This time hasn't been different. It's been the same. The Sortino ratio is maximized with 75% Bitcoin, 25% ETH, right? Like, I've never said that you shouldn't have Bitcoin. I've said that if you want exposure to crypto, Bitcoin will give you better risk-adjusted returns in the pre-halving year. Because no matter the direction of Bitcoin USD, the Bitcoin dominance should go up. So you don't have to, speculate in 1,000 different altcoins to try to make a return. Bitcoin has given you a pretty good return this year, and you didn't even have to take on that much risk. It was the lowest risk cryptocurrency, and it went up, more than 2x so far off the yearly open. Now, there's always a chance that Bitcoin doesn't break into the 40s, right? Like, there's a chance that happens, and that everyone gets, is on board with the, Bitcoin breaking into the 40s, and then it just doesn't happen, right? Like, there's a chance that plays out. But the point that I'm trying to make is that even if that happens, right? Like, even if that happens, then Bitcoin dominance is still likely going to go up. We had 10 weeks in a row where Bitcoin went up, Bitcoin dominance went up starting the week of August 21st. August 21st. Now go look at Bitcoin USD. August 21st. What you'll see here, starting the week of August 21st, Bitcoin was going down, right? August 21st, August 28th, September 4th. 3 weeks in a row where Bitcoin went down and dominance went up those 3 weeks anyways. So it's more likely that dominance goes up if Bitcoin goes up than if Bitcoin goes down, just because when Bitcoin moves quickly, the market just kind of sits in awe and watches. But I'm arguing that even if Bitcoin goes down, the dominance could go up. It's been the argument all year, right? It's been the argument all year. Doesn't matter. If it goes up, dominance goes up. If it goes down, dominance goes up. So if the dominance goes up, no matter what, then a Bitcoin crypto heavy portfolio, has not been a bad choice. And we can cherry pick the altcoins that have outperformed it. Yes. Congratulations to those people who had those. But Bitcoin has not been a bad choice this year. If you're going to pick a year to have a Bitcoin heavy crypto portfolio, what year would you want to have that? Would you want to have it in a year where the dominance is going up like this? Or in a year when it's going down? No. I mean, it would not have made sense to have like a Bitcoin heavy portfolio like throughout this phase or this phase, right? Or even over here. If you're going to have a Bitcoin heavy portfolio, then ideally the dominance is going up, right? Because if you're going to go Bitcoin heavy and the dominance is going down, then you're basically missing out on all these things in the altcoin market, right? All the people that are calling for alt season today were calling for the same thing at 40% dominance and 43%. Do you guys remember when we broke above 49% over here? Do you remember this? Before we broke above it, people were saying it's going to get rejected and lead to altcoin season. Now the alt season that they called for at 49% rejection, now they're calling for it again as dominance is above 53%. While their altcoin is probably down 20 or 30% against Bitcoin since that time. But they don't focus on Satoshi valuations. They just look at the USD valuations and say to hell with, to hell with the Satoshi valuation. Just look at what it's doing on its USD pair. Forget about your opportunity cost, right? Yeah, so you could have been up 30% more if you just bought Bitcoin, which was lower risk. But hey, you're up 5% on the US dollar, which is nice. You got that going for you. So yeah, people are going to call for alt season either way. The point is alt season looks like this. Alt season looks like this when dominance is collapsing. Dominance has not been collapsing here. It's been going up. This is not what people think of when you think of alt season. When you think of alt season, you think of dominance going from 70% to 60% in a month, or 60% and 50% in a month. Last cycle, dominance, in fact, dropped from 70% in January of 2021 to 40% to less than 40% by May. in only 4 months, dominance dropped from 70%, 73% to less than 40%. That is alt season, my friends. That is alt season. Right? This is alts bleeding back to Bitcoin and Bitcoin going higher. And I mean, total 3 is put in a higher high. I get it. I mean, it's the first higher high that total 3 has had. And I'm not trying to say that that's not relevant. It probably is, right? I'm not saying that no altcoins haven't bottomed on their USD pairs. I'm sure some of them have. It's just that if they haven't, then what does that mean for their Bitcoin pairs? And the point was always that you can convert your Bitcoin back to altcoins after the Bitcoin dominance rally is over. Look at, when we look at the Ethereum Bitcoin pair, right? Look at the inverse of it. As humans, I think we're just naturally, we want to see things go up. So for a lot of people that look at the ETH or Bitcoin pair, they just think that it has to keep going up. But look at the Bitcoin Ether pair, right? It's trying to break out, just like dominance did. You guys remember when dominance broke out above a key level? It looks like the Bitcoin Ether valuation wants to go higher and break above these levels. That's what it looks like to me. But the point is that at the merge, 1 Bitcoin would have only gotten you less than 12 ETH. Today it gets you 18 ETH. It's a huge difference, right? So like if you had taken 12 ETH over here, converted it to 1 Bitcoin, and then today, if you converted that 1 Bitcoin back to ETH, you would magically have 6 more ETH, 6.5 more ETH, right? Which at $2,000, you know, if you just say 6 ETH at 2,000, that's an extra 12K that just appeared because you got out of a higher risk asset when people were calling for the flippening and went into a lower risk asset, Bitcoin. You still had exposure to the upside, but you wanted to minimize your downside risk. Bitcoin USD went down after Ether Bitcoin topped. Remember? It did. So if you had converted your Ether to Bitcoin here, right? Here, in the short term, your Bitcoin valuation went down. The valuation of your Bitcoin against the US dollar, it went down. But maybe you didn't know that FTX was going to happen, right? So you converted your ETH to Bitcoin, watched Bitcoin go down. Maybe we're depressed for a little bit about that, but then Bitcoin's up more than 2x. So you maintained exposure to the upside and minimized your downside risk. And because of that, now you have 6 more ETH, right? Same thing could be said for most every single altcoin, right? Same thing for ADA Bitcoin. Look at 1 over ADA Bitcoin. Look at the trend, right? And in August 2021, when Bitcoin would have gotten you 16,000 ADA, now today it gets you 98,000 ADA. Maybe it's not done going up, right? I mean, maybe it is done, but maybe it's not. And maybe we are going to see it break to the upside and then slowly trend back down. So if Bitcoin breaks up and goes into the 40s, then dominance should go up. If Bitcoin goes down, then dominance should go up. Maybe Bitcoin goes up and then dominance goes up and then Bitcoin goes down and then dominance still goes up. And because after Bitcoin hits a high, the Fed starts to cut a month or two after that because the unemployment rate is starting to go up, right? If you look at alternative measures of unemployment, if you look at like greater than 15 weeks, it had moved up pretty quickly, right? Like here's a year-over-year percentage change of it. It's positive, which normally is not a good thing. Anyways, those are my somewhat repetitive views on Bitcoin dominance. I do want people to sort of be aware, though, that it's not going to go up forever. And just for completeness, look at year-to-date ROI of dominance, excluding stables, in halving years, right? So look at it in 2016 and then look at it in 2020. What do you see? In both halving years, dominance only went a little bit higher than what its yearly open was. Why is that? Well, it makes sense when you think about it. Halving years correspond to election years. And election years are when there's going to be more political pressure on the Fed to cut, right? And if the labor market keeps showing weakness, there's going to be a lot of pressure on the Fed to cut. The problem is that the Fed cuts, that means dominance is probably getting close to topping out. Doesn't mean that it's completely topped, right? But within a month or two. And in both halving years, the dominance only went a few percent above its yearly open, right? Like over here, it went up to 1.02x. And then it later on went up to about 1.05x from the yearly open. 2016, it only went about 1% higher at the very beginning of the year. And for the rest of the year, dominance was below where it opened that year. Same thing in 2017, more or less. So my guess, my best guess for dominance, my best guess, which is subject to change because markets are always changing, right? My best guess, though, is that it rallies for the rest of the year. Occasional pullbacks maybe, but it rallies for the rest of the year and could start to form that topping process over the next few months. Because remember, the market thinks cuts are coming early next year. Kind of makes sense with it being an election year and also seeing the labor market show signs of weakness. Do you think that incumbents are going to want to go into the election with unemployment soaring and the Fed not cutting? No, they'll probably say, hey, let's get some cuts in early in the year so that by the time we get to November, by the time we get to November of 2024, hopefully things are starting to turn back around with the labor market, right? And the problem is we'll say, well, what about high asset prices? Yeah, I mean, but you can't have everything, right? Like if you have a high stock market, that's great. People feel good. But if the stock market's going up, it creates the wealth effect. And if you have the wealth effect, that's going to put upward pressure on inflation, right? So what do you want going into the election? Do you want a stock market that cooled off in early 2024 and that is trending higher again in late 2024? Or do you want a stock market that just keeps going up, but so too is inflation coming back? And instead of spending $300 every time you go to the grocery store, now you're spending $400 every time you go to the grocery store. Instead of, gas at $3 or $4 a gallon, now it's back up to $5 or $6 a gallon. You can't have everything, right? I mean, you have to pick. You simply cannot have everything. And I'm guessing that there will be overwhelming pressure for the Fed to pivot in 2024. Overwhelming. Especially if these trends in the unemployment rate continue. And I don't see any reason why they won't. I mean, continued claims, while it was down this past week, continued claims have been moving up. So it would lead me to believe that it's going to lead into softening in the labor market. And again, remember too, that with the unemployment rate, it's not just about people getting laid off, right? It's also about people that are new entrants to the labor force. And this metric's going up. Look at the year-over-year percentage change. Let's take a 7-month moving average, right? Like this thing is going higher pretty quickly. It's at 15% year over year. Have we ever seen that and did not go into a recession? I don't think so. I mean, here we had a recession just beforehand, but it was when it crossed over, right? But I mean, a lot of these times, like in the 80s, when it's up in this area, like you have a recession. And we're getting pretty high. So where's this rally coming from in risk assets? Why is it materializing? Well, I think a number of reasons, and I've mentioned several of them. Yellen issuing shorter duration was one. It took a lot of pressure off the stock market. It basically allowed the bond market to potentially find a bottom, or at least a local bottom, if not a macro bottom. It allowed, in addition to that, you also have favorable seasonality for the stock market after you get out of your pre-election year correction from August through October. So that was favorable. You also have the market finally starting to price in a Fed pause. And I think the Fed's done. I mean, if the Fed's not done, then it just simply means that, the Fed funds rate is not above R star, the theoretical level at which above the economy contracts and below the economy expands. I think we're above R star. If we're not above R star, then those things just get dragged on forever. But if we are above R star, and this is in fact the terminal rate, 5.5%, which was the rate we suggested would be the terminal rate a year and a half ago, I said 5.5% is likely the terminal rate. If this is the terminal rate, the market, one reason is that the market rallies after the terminal rate is hit. That's not new. Go look at the S&P, right? It rallied over here after the terminal rate was hit, and then it still capitulated eventually. You go back even further, you'll find very similar things, right? The market here, we got a pause, market sold off, and then rallied, and then sold off again. Here, we got a pause, the market rallied for a few months, and then sold off. It's not uncommon to see that, right? Here, we got a pause, market rallied, and then eventually sold back off. So we see that a lot, right? We see the market, we'll see the Fed pause, the market rallies. The reason why the market rallies is because the long end of the yield curve goes down, and when the long end of the yield curve is going down, it takes some of that pressure off risk assets. The problem is that, the 30-year, the 10-year, 20-year, that, they top first before risk assets do. And there's a chance that they already topped, right? There's a chance that the bond, the treasuries, that like the 10-year yield, there's a chance that it's already topped, and that things like TLT potentially have already bottomed. No guarantees. Worst case is I think the long end of the yield curve goes back to where the short end of the yield curve is, but who knows, right? Who knows? So to summarize, these are my views. I think dominance is going to keep going up through the end of the year. It might even bleed into early 2024. I think that dominance will likely top out around the time that the Fed starts to cut, which I expect to happen in 2024. Even if the dominance tops out, it doesn't necessarily mean that altcoins on their USD pairs can't go back down. In fact, after this top, USD valuations of altcoins did go down for a little while. Okay, but it would mean that with respect to Bitcoin, those altcoins are finally becoming worth the risk. Not because they can't go down in their USD pair, but it's just that if Bitcoin goes down in their USD pair, the altcoins might go down a commensurate amount, right? So like they're not, they wouldn't drop any more than they otherwise were. So like if Bitcoin were to go to 40K or 42K or 46K, or whether it tops out here and then drop, the initial reaction by altcoins could be very, very negative. But if it continues to drop, then at some point dominance just tops out, everything drops together, the Fed gets to the last rate cut, and then a new cycle begins. In terms of the business cycle by the Federal Reserve, not necessarily talking about the 4-year cycle, which I know a lot of crypto people are aware of, but I'm talking about like the business cycle by the Fed. When you go back to those low rates, just like we saw, in March of 2020 when the Fed cut, and we saw a lot of money printing, and the rest is history. And by the way, I mean, like if Bitcoin is unable to break out here, I mean, with Bitcoin above 38K, it certainly seems like there's a good chance it could break out. But if it doesn't break out and breaks down, if it breaks down, you could still have another example where it then rallies back up a month or two later into either a spot ETF news or the halving narrative, whatever, and still breaks alt Bitcoin pairs down. So we'll continue to follow Bitcoin dominance. Not my most popular videos. I get that. I know I get a lot of flack on Twitter for them, but I really do think it's going higher. I'll admit it if I'm wrong. It's been right so far. If by the, if in a couple of months dominance is not moving, then clearly, the timeline is off. But I still think dominance will go up. no matter the direction of Bitcoin. I'm not taking a strong position on the direction. I think there's a case to be made either way, right? Bitcoin could drop from 38K and leave everyone who was hoping for 40K in the dust. But if it goes up to the 618, which is where it went in 2019, then it means it could go to the high 40s. There's a compelling case to be made either way. I put out a poll the other day asking people if Bitcoin was going to go above 40K to 40K before the halving, and like 78 or 79% of people said yes. So most of you watching this video think that we're going to hit 40K before the halving. Most people, right? So 1 out of every 5 of you thinks that we're not going to hit 40K. So think about that. Like, you know, if you're sitting here watching the show and you think that we're not going to hit 40K before the halving, there's 4 other people for every one of you that thinks you're wrong. Right? So it's a lot of things to think about. As far as Ether Bitcoin, I know it's a contentious view to say that it could break below the June low. I get it. And if it doesn't happen, I know I'll never hear the end of it. I get that. I'm not as deterministic about this, I feel like, as I used to be. Like over here, I was very deterministic about it breaking down. I still think it's going to break down, but look, the market humbles everyone, you know? Market humbles everyone. To be completely honest, I think that the people that are convinced that I'm wrong are more confident that I am that I'm right, right? So like, you know, I think Ether Bitcoin's going to break down, but I feel like a lot of the people on Twitter and whatnot that are sort of, you know, blasting these views, they're more confident that I'm wrong than I am that I'm right. So I think about that too. Like I could see it bouncing and you know, a soft landing ensuing, right? But history shows that's not the most likely outcome. And remember, BNB Bitcoin already broke down below the June low. And a lot of things did. I mean, like I think like Aave Bitcoin, it's up recently, but like I mean the June low it took out a long time ago, right? I mean a lot of these alts took out whatever their June lows were. I mean Dot Bitcoin hasn't even. I mean it's been one of the weaker ones. AVAX Bitcoin did get a pretty nice pump here ever since. I mean it's completely faded that pump though for the last several weeks. All right, I think we've gone on long enough. Dominance is at 53%. I think the next major milestone will be 56. 55 to 56 will be the next major milestone for dominance. Above that is that, you know, that 59, 60% level, which 60% or even just below it or just above it, you know, that could end up being a very significant level for Bitcoin dominance, from which it might start to turn around as we get into the halving year. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We are still running the sale. If you put in Cyber Monday at checkout, you'll get 50% off your first month in addition to the discount that's already there. So make sure you guys check that out. We'll run that just for a couple more days, and then we'll wrap that up, and that code won't work anymore. I'll see you guys next time. Bye.